In the energy quadrant, taking a look at the August crude oil contract, which had a small rally today after the worst weekly sell-off since the end of March. We start the week back above 110, didn't quite hold 110 in toward the close. Today's low, 106.82, was down 1.08% from the settlement of 107.99 that we had this past Friday. On the upside, though, we were up almost 3% at 111.16, up 2.94% to be exact, but we gave quite a bit of that back, ending the day up a little bit short of 1.5%, just short of that 110 level. The 6.3% drop that we saw on Friday was the worst since March 31st, when the price of WTI crude oil fell 6.99%. It was also last week's drop. The 10.5% drop was the worst weekly fall since the March 28th drop of 12.84%. Now, there's stuff going on with Iran again. A U.S. Navy warship fired a warning flare to wave off an Iranian Revolutionary Guard speedboat. So that was a little bit of tension in that part of the region that can affect crude oil prices, potentially spiking prices. But Iran is not selling oil on the open market right now, and they did make some concessions over the last few days toward restarting nuclear talks, which would add Iran's crude oil back to the market, but real progress is still elusive. They asked to forget the demand that the Iranian Revolutionary Guard be taken off the U.S. terrorist groups list. That's one of the concessions that they made. It's a pretty big one, actually, but again, real progress to get their crude oil back on the market is not really being made as of now. Now, also, risk assets are rallying, and crude oil is rallying along with those risk assets. We came off the highs as crude oil closed, and that's likely what dropped crude oil from the up near 3% to where it's settled. But again, if risk assets rally, it's likely that that is pointing to less of a recession risk and potentially more crude oil demand, likely to give a boost to crude oil if that were to continue.